which is one Delhi startup that you are excited about in 2025?
Getting excited about a company called Hi Astro. Very excited about House Easy.
This AI company called Jellu. Everyone says that Delhi doesn't have AI.
Which is one investing mistake that taught you the most?
Don't be driven by FOMO. It's being way ahead of time.
It's still not listening to your gut.
One is AI and the other is D2C. How are you seeing early stage at the moment?
We see a lot of deep tech, consumer SaaS, Gen AI, space tech. I think investors who largely do DTC will see more of DTC.
This tariff war, is India's story or the Bharat story still holding true?
I feel this is a window of opportunity for Indian manufacturing at least to step up and start gaining market share away.
And where are we in comparison to China if we compare especially the sector that you operate in?
Comparison is definitely not the right thing to do at this point. We've had very different histories. We are only a 76 to 78 year old country. But at the same time, the only country that has 1.5 billion people and a stable democracy.
Hi everyone, excited to bring in What's Up Delhi NCR, a podcast series that I'm building to bring in these stories from Delhi NCR region. Here we'll interact with founders, VCs based out of Delhi NCR and get to understand from them what kind of businesses they are building, what kind of trends they are seeing, and what kind of challenges they are facing. This is meant to help you understand that what's brewing in the startup ecosystem in our national capital region. At the same time, give you some nuggets of wisdom that you can take with you and learn from them. I hope this series comes out to be meaningful for you. And if you like it, do subscribe to the channel and share the videos with others who might find it useful. Hi everyone, we are shooting this podcast in WeWork that we have booked through MyHQ, which is India's leading co-working booking platform. You can explore the platform through the link which is mentioned in the description. Hi everyone, welcome to the episode of Growthcast Podcast. And today's episode is special. We are going to sit with VCs based out of Delhi NCR and understand how they evaluate business, what are the trends that they are seeing. And today I have with me Pearl from Maximus Ventures, Apurva from ACV Ventures, and Kunal from Advantage. And with me is my co-host Aditi Srivastava. We are going to host this together. So I think we start on a different note. We'll start with a rapid fire first. So we'll go with Kunal, Apurva, and Pearl. So Kunal, we wanted to understand from you, which is one Delhi startup that you are excited about in 2025?
Lots of them, but I'm getting excited about a company called Hi Astro. It's an AI play on the astrology part.
Apurva?
Very excited about House Easy. House Easy is a secondary real estate transaction platform for apartments below 1 crore. And I think affordable housing is such a big opportunity in India. We are democratizing it, so very excited about that.
Now, this AI company called Jellu. Everyone says that Delhi doesn't have AI. These guys are effectively replacing AI engineers to auto-trade LLMs. Very interesting one.
Are all three Delhi companies?
Yes.
Nice. I go to the second question, which is one founder trait that you value more than pedigree?
Out of all of them, I think resilience is probably the only one. Of course, we like to think that there is no such thing as failure as an entrepreneur. Either you succeed or you learn. But we love failed founders. 50% of our portfolio actually are founders who are trying their second startup. This is execution drops. Strategy will come later.
Pearl, what about?
I would agree with Apurva. Execution is big one for us. Being able to just roll up your sleeves on out there and constantly iterating.
Got it. I'll move to the third and final one, which is one investing mistake that taught you the most.
Don't be driven by FOMO, because what I've always made a statement that we sort of become FOMO becomes the criteria. FOMO very soon will turn into failure. Hitting up, thankful of missing out. FOMO is the next one. A lot of people are grateful that they didn't invest in a lot of companies. It's a being way ahead of time. So as an angel, I invested in MLAI in 2013-14, XR in 2007-8. So timing the market is very important rather than being very ahead of time.
I'd say not listening to your gut when you get certain red flags from the founders of the other side.
Got it.
Sometimes it might be difficult to pinpoint, but there will always be a sense. It's important to sit back and listen to it.
Great. With that, I like to start with the first question that I have for three of you. So Delhi and NCR is now slowly competing with the startup ecosystem, which is there in Bangalore. So what are the some structural or cultural shift that you attribute to this change?
I mean, Delhi operate always giving Bangalore a run for its money. We are all from here. Majority of my investments are here. I think the biggest difference, I guess, would be a cultural. Delhi, typically, founders are far more street smart and are hustlers. I think Bangalore founders are typically much more academic and more structured in the way they think. So if you look at operational heavy businesses, we've seen far greater success out of companies based in Delhi. The other thing we've seen is that dairy founders seem to be far more focused on liquidity and providing investors exits. So we've seen far more number of Delhi companies just right from the Big My Trips and the Info Edges of the world to recently. I think for those two areas, we feel area is a pretty exciting area to be investing in.
But what about you, Apurva?
So I think both the ecosystems have their own strengths. Delhi NCR, I think founders understand policy very well because of proximity to central government. Distribution and sales, I think they're distribution kings. Whether you think about founders who build Zomato or Policy Bazaar, internet scale large distribution businesses. Operationally, I think anything which has ops intensity, think about again Zomato and many others, any kind of delivery companies, Shiprocket, delivery. I think Delhi NCR founders are really. Bangalore are more deeper product thinkers, more likely to take moonshots, bigger outcomes. And like Kunal said, Delhi founders are super focused on liquidity, DPI. So I would say Bangalore is the TVPI capital of the India, and Delhi NCR is the DPI capital.
Got it. Got it. What about you, Pearl?
I would echo some of the points that both Kunal and Apurva have already made. And definitely, you can see that most of the IPOs that have come out, um, whether it is in the olden era or even now, is actually from Delhi. But we invest at the pre-seed stage, and it's quite refreshing to see from Delhi that even at the pre-seed stage, founders often come with revenue and certain thought process around how unit economics are working and profitability. And this is very clear between founder from Delhi or Bangalore. I mean, most of the Bangalore founders are product thinkers. So initially, they would have good thought process around retention, but profitability and revenue definitely stands out for Delhi.
And are your portfolios skewed towards like Delhi companies overall? Uh,
60-40 in my case, 60% would be NCR.
then the rest would be Bombay, Bangalore. Yes.
5 would be Bangalore and 5% would be rest of India.
Got it.
I think in terms of the number of bets, the number of companies probably 50-50, but I think in terms of capital deployed, I think we probably invested more capital in that.
Got it.
I think for us as well, we've deployed more capital in Bangalore. It's just the sheer number of founders that come out of Bangalore versus Delhi. But if I were to look at companies that are already, have reached a certain scale, they are from Delhi. Mula.
So are you also seeing that because of the liquidity events, etc., are more newer founders coming out from these companies from a Zomato? There are definitely a lot more founders that are coming out, but delivery, Policy Bazaar, are these companies also seeing like new crop of founders coming up?
Absolutely. So see, Gaurav came out of Zomato, started Gabbing.
Right.
Naveen came out of Policy Bazaar, Paisa Bazaar. He's starting a new fintech company. You have amazing second time, third time founders coming out of this whole ecosystem now starting.
And how are they different from the first time founders?
So I have a bias towards second time founders. A lot of my portfolio companies are second time founders. And I think they've gone through one startup univ. So they've done mistakes and they have a clear view into what they will not do. So also the desire and aspiration to create something much bigger is there. They've had a 40 million, 50 million kind of outcome, or at times a strategic exit. And this time, they really want to go for the moonshot.
Got it. Got it.
It's also deeper insights into consumer segments. I think that's the most unique thing, or rather like something different that we have seen. Yeah, most of these founders who are coming out of unicorns or unicorns have been operators, and more likely than not have been driving execution on behalf of the founder. So they have a very deeper insight into why they are wanting to build something, how customers will respond, and how they're going to change along the way as customers respond. Taking this sort of a thought process or a strategic alignment, it takes some time for first-time founders to really get on the same page or to sort of align.
Got it. So you're seeing that in operators as well, like not just second time six or operators, yeah.
Like people who are coming out of the unicorns and so on.
Just to add to that, people coming out of successful companies, whether they've gone IPOs or not, just taking deals. We've seen that also happening in Bangalore. I think the ecosystem itself has evolved from the time these unicorns were created in the last 8 to 10 years. Everything from capital availability to infrastructure to payment system, digitization, penetration of smartphones and apps. So it's becoming easier and easier to start companies right now.
Right.
You combine that with people who've gone through that learning curve and gone through the process of building companies, and their ability to raise capital is so much easier. Right? They don't have to start with the typical PC angel round. They're able to raise larger amounts of capital, and they have deep insights into what is it that they want to build. They have the maturity to go and build a superior quality of team around them because people have that level of trust from those kinds of people. And that's why we are seeing a lot of cohort of founders that are coming out of these companies.
So in Bangalore, for example, a lot of and I'll say Flipkart because Flipkart has sort of sprouted so many companies. But what it's also done is a lot of their operators have invested in a lot of companies. So they've kind of built like an entire ecosystem for Bangalore and seed capital and risk appetite. Which is that company in Delhi that is getting there or is there already, in your view?
I would say we are seeing a lot of people come out of Zomato. Zomato also had this culture, from what I can tell from an outsider perspective, that no, everybody had to take accountability and ownership, and ultimately sort of trains you towards entrepreneurship.
Got it.
And I think we yet to see, of course, some of the breakouts because it's very split. ESOPs have just started to vest and IPO. It's barely been couple years since the IPO. And that's one. Having said that, even Cardeco, I think that I would say would be the second company. In fact, Cardeco, probably there are more people who are coming up than even Zomato.
Oh, and it's Jaipur based, right? Car.
Japanese, but it's in good jobs.
Okay, right. Okay.
Yeah.
I would say Oyo. Last one, I would say 2 years. Lot of Oyo founders. So Aditya coming out, starting Akasa Air. Abhinav just raising a large round in Bangalore. Gaurav Ajmera doing, the pet care startup. So great founders who've seen all the mistakes and who know how to focus on reading customer delight, who've seen scale. So Oyo would be the third one adding to what Pearl said, yeah.
The difference, one I like to point out, is that with regards to Flipkart, of course, it's significantly more successful in the number of successful founders. Because the original founders of Flipkart themselves got significant exits there and had the liquidity and capital to sort of accelerate and growth things. So they're able to being able to easily identify team members within Flipkart who have the ability to break out and were able to deploy capital behind them, sort of created the perfect sort of storm that allowed Flipkart to spin out. Yeah, I mean, Rapido was an outcome of that,
Right.
as well as multiple others. I think if you look at it, Delhi, if you want to look for parallels, all the original founders of these companies, whether it's Soko or Carbeco, the founders are still around. They've not had an exit. You've seen people, you well said, but the original founders are still running hand to hand, 10 years, hand to mouth, hand to hand. We businesses, and I guess we're just waiting for them to be able to hang up their boots or move on and start becoming sort of the wind behind the sails for these companies, second cohorts of investors.
Got it. Got it. So I was just talking to a VC friend of mine yesterday, and we were joking that there are just two cohorts of companies coming out in early stage. One is AI, and the other is D2C. So it's there's nothing in the middle, and those are the two kind of deal flows that they're seeing. How true is this? So this is a very Bangalore scenario, maybe. But how are things? How are you seeing early stage at the
So I think we're seeing, I think it also depends on what kind of deals have you done in the past. There's a self-selection element.
right?
So we see a lot of deep tech, consumer SaaS, Gen AI, space tech. I think investors who largely do DTC will see more of DTC. But amazing space tech companies, defense, robotics, manufacturing. So yeah.
I think sectors are cyclical, right? So you're going to have periods of time where certain sectors are in favor of investors and mimicking what's happening in the West, or if we feel there's significant opportunities. We've seen these sort of cycles in e-commerce, delivery, logistics, shared mobility, EV. And now, yes, there's a lot of focus on these two areas, D2C. But to say that there are no other exciting opportunity sector, if I operate in either these, to say, fortunately for me, if every other sector agnostic fund is focusing on those two areas, great. That gives me the ability to get and identify better quality of founders, and we're not fighting for deal flow. So I think it's a great thing that other founders and other investors are focusing in area that's not in my core focus area, and probably be able to close better quality deals.
For what are you saying?
Yeah, to add to that, I would say that, we're not necessarily seeing AI as a sector. In my view, AI is a technological revolution that will change multiple sectors or will sort of touch upon multiple sectors.
Right.
So to equate that with D2C probably is not the right way to look at it. I mean, there is a lot of D2C activity that has happened. Exits are easy, liquidity is easier. So there is definitely, that sort of pull and push factor both that is playing out. But having said that, there are other sectors where quite a few interesting stuff is coming out. Like Kunal mentioned about the astrology company is using AI. It's, replace astrologers. And similarly, there are consumer tech companies, deep tech companies, smart manufacturing and logistics companies that are coming up and using AI, both at the physical level as well as, at the software level to be able to create that next gen. And I think that's what is exciting.
Got it.
I should move and ask one question. If somebody's first time founder and watching this podcast, there are two things that I'd like to understand. One, does it mean to have a early stage readiness? And how do you evaluate founders when there is no revenue still? Like, what are some of the traits that you look at?
I think there is no such. The right time to start is when you have able to identify an opportunity or a missing gap.
Right.
And there are a set of customers who are, who have a hair on fire problem that you're trying to solve. I think the biggest thing that we look for founders is the fact that they have this deep insight, and they know they are coming up with a unique way or a unique proposition to solve for that. For us, founder market fit is an extremely important element that we look for, and that is an outcome of founders who probably spend some time in that domain. We also have different ways of evaluating an opportunity where it's a category creation, where it vis-a-vis an opportunity that's a land grab. We look for different profile of customer founders depending on whether the business is a category creation or is a land grab.
Got it. What about you, Pooh?
In addition to what Kunal said, I would say, are they a talent magnet? Are they able to attract the best talent? Companies are like a pyramid. So founder might be great, but if you're not able to attract the best quality talent, your outcome would be much smaller than what it could be. So we're really looking at people who are able to attract outstanding talent who's worked with them earlier. So when you're looking at their initial slides, you want to see what's the quality of talent. You want to see what are people saying about them in the industry, how great it's to work with them.
Got it.
So 90% of the companies that we've done are at pre-product, early revenue or no revenue stage, right? So for us, this is our bread and butter. And there is only one thing that we really look for. I mean, of course, the market has to be large. There has to be a wedge in the market. All of these things are good. But when we start talking to the founders, we want to know, what do you know about that particular problem statement that none of us or others have yet not sort of tapped on? And most importantly, how do you know it? Because this is where they have the ability to think not just at the second order level, but even deeper than that. And over time, they sort of evolve to picking up on other skills and building the kind of company that we're looking for. Of course, to Apurva and Kunal's point, it's really important that they have a vision and they're able to attract and sort of tell those stories to get the right people across. But it's also important that they are very hungry to learn so that they can pick up on all of those skills and any other skill that is required along the way. And I think this one sort of um, trait at the beginning gives us that indication that yes, they will be able to learn anything that comes along their way and continuously evolve. Because our founder's journey is never a point in time, it's always a slope. The way we are evaluating it is at only that point or maybe a little sort of expansion of the point? Or do you try to create that slope across?
Okay, and in terms of, he did ask in the rapid fire what traits you look at. What is the one red flag that you absolutely steer away from when, especially in an early stage founder?
Oh my God. How many? I would say uh, slow response
That's actually a very interesting one. Yeah.
because you need very high degree of agency, urgency, momentum. You're trying to fight gravity.
Right.
Uh, if you ask for a information piece that takes time, or I think that for me is like a early red warning sign.
So, I mean, now my team is aware of it, but I've never funded a founder who's come late for a meeting. Reason for that is if he can't respect my time, and how to respect my capital.
Interesting. For me, it would be any founder trying to create unnecessary FOMO. It's around this closing tomorrow. Please stay on.
Got it. Got it. Hey, I think we have talked about what are the red flags, but if someone is starting today, what are some of the sectors that you would like to suggest them to explore out, maybe try out that these are the sectors which will maybe have a sustainable future?
So, I mean, I can talk about from my area. Of course, we are a vector focused fund. We focus on mobility and now the transition of being turned. So, in that area, I think one thing that we picked up is first, we want founders to have deep insights in that space. But one opportunity we realized is that from regards to electric vehicles, I don't think India can compete with China or America or Europe with regards to personal mobility. We've got a Tesla and big IDs. But areas that we are focusing on is commercial vehicles. And I think we have an opportunity to build and become market leaders in electric commercial vehicles. And the reason for that is India is one of the largest markets for commercial vehicles, whether it's tractors or buses or trucks. More importantly, 10% of commercial vehicles consume 70% of our energy and therefore is responsible for 70% of vehicular pollution. So within that whole ambit of mobility electrification, those are the areas that we're investing. India has historically had many examples where we leapfrog on traditional legacy to new age. We look at telecom, we went from landline state to digital, bypass analog. If you look at payments, we went from cash to UPI. We've sort of, and we feel in electric also, we're going to sort of skip through and go straight to commercial vehicles.
Got it. Apurv, what about you?
I would say wealth tech. Uh, I think as India's per capita income goes from $2,300-$2,400 to $5,000, we're going to escape the subsistence layer, roti, kapra, makan, bandwidth, and data packs. Helping Indians manage their money, save better, invest better, and go beyond the 8, 10, 20 towns, cities to neighbor. So vernacular wealth tech, agentic wealth tech, allowing every Indian to take better financial decisions is a huge opportunity.
I would completely agree. I think that would be one sector that I'm very excited about. But generally, fintech, we do quite a bit of fintech. Almost 60% of the portfolio is fintech. And we believe that today, if you look at it, only 350 million people out of 1.4 billion people have access to UPI. So that still leaves more than half the population of the country that doesn't have digital payment access. I mean, the first step would be to bridge that and then sort of start creating all the layers. The minute you have disposable income, you want to save better, you want to invest better, you want to insure your wealth, insure yourself. And then further down the line, also sort of, have our financial service systems be able to cater to the needs, which is where the fintech infra layer comes in. I think this is one, but the other one that we've been looking out for and doing focus group studies, really sort of excited about is how Gen Alpha overall turns out. This year, Gen Alpha has turned 15. The initial studies have shown that they start influencing their parents at the age of 4. By the time they turn 8, they are digitally fluent. They are making at least 20% of the household purchase decision.
Wow.
And in the next 5 years, they will continuously this influence will increase. So if Gen Z has created an entire set of consumer and consumer tech products, how will Gen Alpha really do that?
I think I completely resonate because my son is 2 year old and most of our order daily on these quick commerce platform is dahi and ice cream. So I think he's already making those decisions for us. But we had a look at it from a VC point of view. If I look at from a founder point of view, what would like to suggest to founders if you are evaluating a VC? What are some of the things that they should be looking at? Maybe the distribution, the value that they are bringing to the table.
So a couple of things I tell founders is ultimately it's a dating, speed dating, right?
Yeah.
I always tell founders that look, ultimately not every VC is right for you. Just like we select 1 out of 100 opportunity, VCs are, I mean, founders also have the right to select which VC that they want to work for. So it's important two things. One is never give up because you never know. You may have 99 rejections before the 100 VC loves what you do. But never give up, keep going. Second is do your homework. Every VC has a certain pieces or focus areas. Understand what those are. Every VC has a specific check size that he likes to do. Understand what it is. Every VC likes to come in a certain stage of the evolution of that company. Understand what it is as well. I think one of the pet peeves I have is founders typically go and reach out to 300 VCs at the same time and expect all 300 to respond without realizing that out of those 300, 95% VCs are not even relevant to what you're doing. Do not invest in their stage. Do not invest in the stage that they're in. So do your homework. Be very, very clear who are the VCs who cut checks in your sector and the size. And more importantly, don't give up that, you're kissing 100 frogs, give you the 100 fun that's going to turn into the Prince Charming.
So I would say in India, other than a few exceptions, maybe like Zepto, uh, typically the cycle to create an institution is anywhere between 15 to 25 years. So Zomato listed after 14, 15 years. Oyo would complete 10 years, maybe more. So look for institutional partners who are long-term journeymen, who are going to be friends, well-wishers, and have massively long-term orientation versus, people who would stress you out. It's also going to be important to enjoy the journey. You should be able to spend some time with them, play pickleball, have a beverage. Uh, that for me is super critical for founders.
Um, Again, because we have such stalwarts, I have to echo some of the thing that they are saying as well. So I would completely agree. What we tell founders is we want to become the person that you feel that you can call at midnight when things are not going right, even though you might have 100 other people on your contact list. If we cannot create that kind of a trust, then the kind of partnership that both founders and investors are looking for doesn't really come about. Governance and all of these other things that we're talking about is actually not something you can do in a boardroom, in my view, in my humble view. Neither is something that you can do by telling a founder that this is something you should be doing. It comes from a place of that safe space and that trust that gets built along the way. And that's the right partner for you. And I think that's what founders should be looking for. Someone who can actually nurture and guide them along the way and look out for them.
So, a lot of the larger VC funds have like operating teams as well. And one of them was actually joking and saying that the operating team is actually used by the bottom 50 percentile of the founders, and the top 10 percentile actually never get to ever even experience what the operating team is about. Until and unless, like, it's, I think, once or twice in a year they had they actually said the queries are actually once or twice in a year. And these are macro queries related to like FDI or something like which is very macro that you want to get a view on. But at an early stage, what are the real value adds that a VC can do to a startup's journey to accelerate their growth, and uh, where are founders actually finding VCs to be useful in the early stages?
So I would say, like Pearl, I'm an angel, so I invest absolutely day -1, day zero. Uh, Two things, GTM, customers' money is the best money. So if as an investor, you can help and go to market and help them get customers, distribution, and second is subsequent rounds.
I think what we realized is that having sort of have now gone through at least 25 0 to 1 journeys with a lot of our other portfolio companies from fund 1, fund 2, all in the same sector, we started picking on similarities across all portfolio companies because they're in the same domain, different form factors or things like that. So we're able to and the team, of course, is able to pick up and see what is it that would add value to the next cohort of investees that we make. So we bring best practices that we've learned from prior investments, and we're able to sort of take forward and have founders come up to speed into that. Second thing, what we do is we've realized it's important for us to connect an existing founder who's probably in a 10 to 100 journey with a founder who's now starting a 0 to 1 journey. So they start mentoring and guiding them as well. So we have this program where we sort of create mentors within our own ecosystem. The other thing is that, again, I'm a sector focused fund. We've actually created not just an operating team within the fund, we've created a deliberate ecosystem that constitutes our other founders, our other startups, our LPs, and other key resources in our domain. So we're able to pull all of those together depending on the stage of on which the company is evolving and what are some of the challenges that they are facing. And sum of parts is significantly larger than the whole. So it's our ability to leverage that whole ecosystem is the real value that we feel that we bring to them.
Got it. Got it.
I would say the biggest, there are two value adds where we have seen that it has materially moved the needle for the founders. One is, of course, being able to introduce them to customers. That becomes increasingly important in a B2B business. If I were to give you a fintech's example, being able to crack, let's say, a Bajaj or a Shriram can take anywhere between 12 months to 14 months. If we can create an ecosystem, as Kunal was alluding to, within some of these segments that we are investing in, with the right stakeholders and introduce them, it sort of cuts, the journey by almost 6 to 7 months and accelerates that next step.
Right.
The second one is being able to give them guidance on how the next set of investors are thinking.
Right.
As a founder, it's very difficult to be able to keep track on everybody's thesis. Theses are evolving, people are evolving within each organization. How does a particular partner versus a VP think? So being able to guide them and train them accordingly. So each of those conversations can be tweaked and tailored.
Understood.
Got it. We move to the next question. So, among this tariff war, is India story or the Bharat story still holding true? And would like to also draw a contrast with how you're seeing Chinese ecosystem evolve and where are we in that journey? Are we reaching there? Are we still far away?
I mean, I'm always the half glass full kind of guy. So I think if I look at the uncertainty and challenges that this tariff wars is creating, I feel this is a window of opportunity for Indian manufacturing at least to step up and start gaining market share away. We have 2, 3 companies in our portfolio that are global logistics or global manufacturing. And we've looked at the fact that many of them have started receiving almost 4 to 5x the number of LOIs or inbound inquiries for sourcing material, sourcing equipment, etc., etc. So globally, a lot of companies, especially in the US, are looking for alternative sources. I think now it's the biggest challenge, of course, will always be that will India have the ability to step up, be able to deliver. And I won't get into the reason why that's the biggest $1 trillion question is because we have challenges with regards to labor, regulation, infrastructure, logistics, and things like that. The good news is we seem to have started working on fixing all of those areas in the last 7 to 8 years. So I think I'm overall bullish. The great thing is that when there is uncertainty, you need people who have expertise and understanding on the space. And if you've been focusing in that area, you know exactly if you're product specific or sector specific, you have a better opportunity to actually build a resilient business model to be able to leverage or maximize the opportunities that has come about because of this challenge.
And where are we in comparison to China if we compare especially the sector that you operate in?
I like to say we should never compare ourselves to China. It's probably we are India, we'll never be China, just like China will never be America. I think we have to have our own model, we have to have our own share. We have a different set of challenges. Ultimately, if you really had to look at it, we are probably where China was 30 years ago. So expecting us to come and compete and beat China if you benchmark on a current basis, I think is unfair. Uh, and 30 years from now, we may reach to where China and where China will be 30 years ahead of us as well. So without comparing China, I think what's important and far more important is to know where is India today, what are opportunities that present themselves to India, and focus on that.
What is Apurva your take on that?
I would say I'm very long on India. So I returned to India in 2012 because I'm long on India. And I think our growth story is only going to accelerate. This is the time to build in India, invest in India, work in India, operate in India. So super, super bullish. Uh, every a bad day in India is better than a great day anywhere else.
Right.
The markets are doing very well. Exits are happening. Amazing founders are coming. So we should focus on our own game and every week become better.
I would say, no, that comparison is definitely not the right thing to do at this point. We've had very different histories. We are only a 76 to 78-year-old country. But at the same time, the only country that has 1.5 billion people and a stable democracy. And that in itself is a huge achievement. Exactly. So I've left everything to come back to India because I believe in India. It's not just nation century.
Kunal, me, a lot of us are.
Yeah.
I keep joking and say India is a country that will always disappoint the pessimist and the optimist. So I will be middle of the word, and we'll always be king. But don't be extra long on India, but also never right.
Like it's like Rahul Dravid consistent.
Talking about pessimists and optimists, let's talk about your stakeholders. What is the LP sentiment towards India at the moment? And we can divide that into both Indian LPs and foreign LPs and take that into part.
The majority of LPs, at least for the prior two funds, were domestic. They were institutional, so they were strategic in nature. So we have always kept them abreast in terms of how fast things are changing and evolving in sector and the auto industry. So they recognize the opportunities that are there. And team operators themselves, they are also very cognizant of the fact that there is no straight line to success. So they have significantly higher ability to be comfortable with deviations or short-term market corrections and things like that, whether it's sector or whether it's the public markets themselves. So we'll be very fortunate in that respect. With regard to global investors, of course, I think overall foreign LPs are bullish about India and the opportunity. One of the concerns that that keeps coming up is that all the existing investors who have deployed capital have seen very little liquidity. So fortunately, in the last 18 to 24 months, we have empirical data to show that because of changes in regulation, you've seen a significant number of tech companies or VC-funded companies that have gone public and have started giving liquidity back to their investors. And bus-making companies for the first time were allowed to go public.
Right.
Which has been changed. I think we have data to show that their biggest concern has now been addressed. Now it's just a question of short-term cyclical sort of reaction that we're going to see. But I think we're seeing significant interest from global LPs coming into India as well.
What I hear from my VC friends, I don't run a fund like two of my friends. What I hear from my VC friends is largely around how are you tightening governance? LPs are asking VCs, how are you tightening governance? What's the quality of audits are you doing? Are you just looking at third party DD? Are you doing your own?
Hmm.
I think those are the questions which we could do better in. And if we do better, more capital will flow.
Got it. What do you?
I would agree with some of those points as well. The biggest question today that we are seeing come from both domestic and global LPs. By the way, we are also more towards domestic, right? About 80 to 90% of the capital is domestic. Is DPI? Where is the DPI? I think some of those questions sometimes can be a little unfair to ask at this stage as well, right? But as an ecosystem in the last 1 year, we have shown that India has the ability to give liquidity, and hopefully we can keep up with it over the next 4 or 5 years to consistently generate that liquidity. Because at the end of the day, whether it's institutions or family offices, they are recycling capital. And I think the second one, the big one, is governance, even higher than liquidity. I think most of the So like our LP base is also mostly corporates or large family offices, single high offices. Most of them would have built their businesses and know that there is no sure shot winning. When they're investing in this asset class, they are underwriting a significant amount of risk. But the risk that they don't want to underwrite is a fraud. They're happy to underwrite market risk and product risk. So I think that's something, again, how do we, as an ecosystem, sort of create more of a narrative that risk doesn't sort of mean the ability to do.
So how do you kind of change that? So I get that when you're investing in a company, you'll do your diligence and, these things matter, the third party, first party diligence, and you sort of get in. But founders evolve as fundraising rounds, subsequent rounds happen, and sometimes things change at a later date. As an early stage investor, there isn't a lot of access beyond a certain point that a founder gives you eventually over time, until and unless you have an excellent relationship. So I think that's one way to think about it. But how do you prevent something happening at a larger scale when you yourself may not have that kind of visibility going in? Like, are there checks and balances that you put in place? How do you do it?
This is my opinion, but I'm of the view that you can't put enough checks and balances. We all know that, there are plenty ways that you can, if you want to change things, you can.
Yeah.
If you want to mend your ways, you can. It's more about the narrative that is acceptable versus the narrative that is not acceptable. But we've not necessarily come out and spoken about it as much as we are speaking today.
Right.
There needs to be more of these conversations that it is unacceptable. And once, I also feel like now you're seeing a lot of mid-tier leadership that has started to come out and invest in startups.
Right.
It is directly or through, different syndicates of funds as LPs. For them, it's at the end of the day their own capital.
Harder.
Right.
And they wouldn't want to see their peer group sort of acting in such a way.
Right.
When this group also starts to actively invest, actively put their wealth into it, it becomes more of a community that, we've taken capital from our friends, we are generating wealth for our friends, and hopefully adding back to the ecosystem and paying it forward.
Right.
Then that's the narrative we want, as opposed to, the other way around.
Got it. Got it.
I think one thing, I'd say to assume that, probably as an early stage founder who's just starting on, I don't think anybody really has the intention to commit fraud or try to make money. I think one thing we have to be cognizant about is that probably the founder's journey is already very, very difficult, right? So one is as investors or as sort of support system, to make sure that we have to be fair founders at all points of time. I don't know why we expect founders to sacrifice everything and not even get a decent salary to take care of their expenses. I don't know why partial liquidity at every stage of funding is looked down upon, and people assume that if the founder is taking some money off the table, he doesn't believe in the business, so he doesn't believe
Right.
in that. I think we, in fact, encourage a lot of our founders to keep taking some liquidity, de-risking it, and making sure that he's making enough, depending on what stage of life he's in, to be able to afford a good quality of life and living for himself and his family. Reduce the need for them to take shortcuts and things like that. Don't look down upon partial liquidity or founders taking liquidity up in the course, and be fair with that, whether it's founders, whether it's employees. So a lot of things that we can do as investors that will sort of encourage founders to remain in the straight and narrow and things like that is what I wanted to just point out.
I would completely agree with that. You cannot keep creating wealth for your investors for a decade without taking anything out for yourself. There has to.
Yeah. In fact, there was this recent post by a Bangalore founder. Yeah. It's sad. I don't know if it's real, but it's basically saying there's more than 100 million and still stay in a very small rented apartment. Have not been able to.
So, yeah. And move to the last question that I have. I think we keep on hearing a lot about AI, which is one tool that you are using to become more productive. Would like to understand from you three.
I'm going to tell you two. Sure. So I think Gemini Deep Research is incredible. I use it to prep for meetings, look at, financial statements. Fabulous tool. And second is Notebook LLM to convert, lengthy docs,
Into podcast.
PDFs, and just listen to it while driving.
Got it.
I'm using the basics. I'm using ChatGPT. I'm using Perplexity. It's just like that. But my team is probably using it significantly more. So
What I would say for me as well, it's Gemini and a little bit of Grok. Gemini is fabulous at summarizing emails. I can get through 100 emails in 10 minutes.
Wow. I use this, actually a lot of VCs in Bangalore use Granola for meeting summarization. That works very well. That is the new unlock that I've seen, like beyond the ones that you're mentioning.
I think one thing that I'm finding fascinating these days is why coding, which is basically you don't know anything about coding, but you are coding.
Oh yeah, you asked me to make a website on that.
Yeah, so I asked you to use Lovable.
Yeah.
I had zero coding knowledge. I was able to produce a website within 20 minutes, and that is both front end and back end. So I think that is giving more power to the people who want to build. Or you don't have any excuse. You just build it right away. With that, I'd like to end the podcast. Thank you so much for taking out time. It was great interacting with you.
Thank you.
Likewise,
Shashank, for